Hello and welcome everyone to the week ahead commodity report for the 3rd to the 7th of December 2018, presented by myself, Phil Carr, at the Gold and Silver Club, and we will of course be reviewing gold and oil for the week ahead. We have quite a few news items coming up actually in the following days. Firstly, this weekend we have the G20 summit, and then going into next week we have the OPEC meeting, and also on Friday we have non-farm payroll. So we've got quite a few major news items which will provide trading opportunities. Now, what is worthwhile being aware of as we go into next week is the positioning from hedge funds and money managers, where we've seen a bit of a change here and a shift in positioning going into next week, is that hedge funds and money managers have raised their net long position in US crude oil futures in the latest week. Quite important because we have seen consecutively over the last few months here a reduction in the net long positions for crude oil. So we're now seeing a switch here as we get closer to the OPEC meeting next week on expectations that OPEC and Russia will agree some sort of production cuts going into next week, which could be a major mover here for oil prices. But of course, if they don't cut production, that could also result in a significant move to the downside for oil as well. So oil is going to be in play as we go into next week, and the Fed, as outlined in the FOMC minutes last week, all policymakers said that rate hikes were likely warranted fairly soon if the US jobs inflation data were in line or stronger than the Fed's current expectations. So all eyes will be on non-farm payroll towards the end of next week to see what impact that does have on the US dollar, and also on the inverse correlations with a lot of markets, including gold and silver, of course, as well. So with that, let's move over to the charts, and I'll talk you through the key levels that we're looking at next week. Firstly, moving over to gold, which closed on Friday at $1,221 US dollars per ounce. It has been a very tight range for gold over the last week, trading between $1,211 up to $1,228 US dollars per ounce. This has been one of the tightest ranges, in fact, that we've seen so far in 2018. So we've essentially moved within a 170-point range, or $17 range here for gold over the last week. So as we go into next week, it's just worthwhile being aware of those levels first of all, because if we were to breach those levels in either direction, that is where, of course, we could see a bit of a breakout here after the consolidation with gold over the last few days. Certainly, support at the moment is coming in at approximately $1,210, and we've got resistance at $1,230. So normally when you get a consolidation like this, once we have a resolution, we should get a sizable move. Although gold is consolidating and coiling at the moment, I'm leaning towards the potential for more downside as we go into next week. I've still got a sell signal on gold, which appeared midweek last week, although it's been quite a tight range here, and I do see the potential, if it doesn't manage to break above the 1230 zone over the next week or so, gold could then start to roll over, make a move back down to approximately 1,218 and then 1,210 US dollars per ounce here. We've got quite a lot of overhead resistance at the moment. Unless we have something significant come out of the G20 meetings over the weekend, or if the US dollar was to sell off next week, that could propel gold higher. Otherwise, the path of least resistance here would be to sell off and roll over back towards 1,210 approximately. If we were to break below $1,210, I would then be looking to target the recent swing lows here from mid-November at 1,200 US dollars per ounce. That's if we roll over and break through the recent levels of support. On the upside here, if gold was able to clear back above $1,230, I would then be targeting the next level of resistance here, which resides at approximately 1,236 US dollars per ounce. Week to week at the moment, gold is tending to move about 150 to 200 points per week. But at the moment, what we're seeing with gold is the potential for a little bit more downside as we go into next week, but that is to be confirmed. However, that also sets up really nicely for a trade into mid-December around the FOMC statement and rate hike, where we are looking to buy back into the metals at better prices in order to take advantage of a seasonal play as we go into January and February. Now, moving over to crude oil. So crude oil going into next week will certainly be on a lot of traders' radars because we have the OPEC meeting next week. Last week, we continued to ricochet between $49.50 per barrel up to just over 52 US dollars per barrel. So we were quite tightly range bound with oil. We're anticipating this, the potential to hold under that level of resistance around 52 US dollars per barrel. We are coiling at the moment with oil, and some traders have noted this major level on the chart. Okay, so this is the weekly chart here. If you have a look at the trend channel, there is a certain degree of price action which is bouncing off the lower end of these channels, and we're right at that point at the moment. More significantly is the weekly close here. So we've had 7 weeks consecutive selling pressure to the downside for oil. Last week was the first week now over the last 8 weeks where we've actually seen a reversal now. So on the weekly chart, we've formed a doji, which is essentially an indecision candle here. And going into next week, we of course want to see a resolution as to which way oil is going to break, because on the OPEC meeting, we could either see a significant bounce higher for oil, or we're going to roll over, break below $49.50 per barrel, and have a significant sell-off. If I take you back to the daily chart for oil here, I'll show you this in a bit more detail. So one thing again to bear in mind is that hedge funds and money managers, they have increased their net long positions in US crude oil, and they have been reducing their net longs over the last few weeks. So this has been a change in the overall sentiment from funds here. We also have a technical buy signal which is developing, but we don't have full-on confirmation of that until we get a break above a lot of this consolidation, essentially until we get a break above the weekly highs here, and we can clear approximately $52.50 per barrel. From OPEC meetings in previous years, after we have some sort of resolution, so once we know whether OPEC are either going to cut output or they're not going to take any action, or they're going to meet somewhere in between in terms of some sort of deal, once we know what that is, it could easily be a 300 to 400 point move within a couple of days here with oil. So approximately a $3 to $4 move within the first couple of days after we have a resolution here. If you go back historically to OPEC meetings where oil has been very oversold and then OPEC don't take any action to cut the output, we have certainly seen up to $5 to $10 moves within a couple of weeks afterwards. So that would mean if OPEC don't take any action and they allow the current oversupply in the market to continue without any sort of cut of output, so if no action is taken and we break back below $49.50 per barrel, we could easily move back towards $45, and in fact below that within 2 to 3 weeks we may even get a revisit back towards 42. Now of course on the flip side of that, if they do take some action, we're at a very pivotal point here where if oil is to break out, it would break out from this downward trending channel which has been in play over the last 6 weeks here. So if we were to get a very significant break and a close, especially above the 52.50 zone, and really start to build up momentum to the upside, on the flip side of that, it could also easily be a $3 to $4 move, taking the price initially back towards $55 per barrel. And of course, above that, if we were to break and close above that previous level of major support, which is now turning into resistance here, if we were to break above that level as well, that is where we could see a really strong recovery for oil and potentially a rally back towards the $60 per barrel level. Now, that won't happen all in a few days, but it is possible within the coming weeks, if we were to see an output cut, that we could then break above a lot of that downward trend, start to build momentum here on the weekly charts where we're very oversold at the moment, and start to build up a retracement to the upside. But that scenario would likely only play out if we were to see an output cut, in which case that's where we could really start to see traders and investors come back into oil on the long side, and we could very quickly see a rebound in price. So if we are going to see some sort of recovery here for oil prices, the OPEC meeting next week would likely be a prime catalyst here for a large move. So definitely oil needs to be on your radar as we go into next week. Now, of course, at the Gold and Silver Club, we will be trading this live as we go into next week. We also have Friday's non-farm payrolls as well. So if you'd like to find out more, especially the exact trades that we will be taking, which get delivered via WhatsApp, email, and SMS, and you would like to join a community of successful traders, there is an opportunity for you to join us at the Gold and Silver Club. If you would like to find out more, and particularly you want access to the trades that we will be taking next week, going to OPEC, the non-farm payroll, and also as we transition into the FOMC rate hike in mid-December as well, you can join us on the private members live trading room. As a member, you get access to live trade alerts. Those are delivered via WhatsApp, email, and SMS. You have mentorship, expert advice, in-depth market analysis, and trusted insight, so you can know earlier how to act quicker and maximize your return on trade opportunities. For more information about the service, please go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will get in touch with you ASAP. Also, make sure you subscribe to our YouTube channel. That way, you're kept updated with the latest commodity reports.